All right, let's talk about how to properly record your real estate agent commissions inside of QuickBooks Online. The way that I'm going to recommend that you record your commission checks is going to give you more information and more data into decision making when it comes to your real estate business. First, you're going to be able to kind of see the value that your broker provides. And then, second, you're going to be able to benchmark yourself against other real estate agents as well as benchmark your expenses so you have an understanding of how well you're doing inside your business and if you need to cut some of your expenses in order to retain some of your profit. So to do that, first I'm going to jump over to my little gray whiteboard here, and we're going to kind of go over some things. I already pre-wrote out here that what it would look like in a normal commission. You know, let's say you sold the home for $300,000 with a 3% commission rate, leaves you with a $9,000 GCI. With a 70-30 split, I know there's a lot of different splits that could be out there, but just for, simplicity, I'm just going to go with a 70-30 split. The resulting number is 6,300 is what would usually be paid to the agent. Now, this is the number that I see a lot of real estate agents record, is the 6,300. And this isn't necessarily wrong, but the issue that I usually have with it is that it leaves a lot to be desired when it comes to being able to make financial decisions from your profit and loss statement. And also, like, because I look at brokers as an expense and they need to be able to provide value, because at the end of the day, I'm really generating $9,000 worth of sales activity or in revenue, because just by switching to my broker, or in some brokers, I could keep nearly 100% of that depending on the brokerage that I'm with. And so it's a good idea to actually capture your total GCI. And so what I recommend doing is actually capturing the number, the $9,000 here in GCI, so that when you're looking and you're pulling a profit and loss statement, you're seeing $9,000 rather than the 6,300. So let's talk a little bit about how to do that. The method that you're usually going to typically use is going to be a general journal entry, because usually what ends up happening is most real estate agents will go to their banking, they'll go to their transactions, they'll go to their bank transactions, and their bank transactions are generally going to pull in the amount of money that was deposited into their account. So generally, I don't have any automatic bank set up feeds because I'm looking at a blank file for QuickBooks Online. But if I had this set up, I would generally pull in the $6,300 deposit, and it would get deposited under my sales. So, when I pulled my profit and loss statement, I would see my revenue for it would be 6,300. But what I'm recommending we do is we create a general journal entry. But before we do that, we have to have a couple chart of accounts, or really at least one chart of accounts that we want to see. So if you don't already have this, you're going to go to transactions, click on chart of accounts, and then you're going to have to create a new one. So you're going to click on this new button here. And then you can go ahead and name the account. In this account, we're going to try to account for brokerage commissions. Now, you may want to create multiple accounts or multiple sub-accounts to try to record brokerage commissions. For example, you may want to track transaction commissions versus just, the straight brokerage commissions. But for simplicity, we're just going to go ahead and create a simple one that says brokerage commission fees, we'll just call it. And the account that you're going to create it as is a cost of goods sold account. And obviously you can see I've already created some accounts, so that's why it's giving me this red button. But if you're newly creating this account, you would go ahead and hit save, and then you would have that. If you wanted to create sub accounts, like here, as you can see, the transaction fee is nested under commission to brokerage. You can do that by clicking on make this a sub account, and then it'll ask you what parent account do you want to send it to, and then you would just hit save for that. Now you need obviously a parent account set up before you can create a sub account. Now with those accounts created, you're going to go ahead and go to the new tab, and you're going to click on journal entry, and that'll pull up a journal entry for you. And what you're going to do is there's basically two transactions that you need to account for. Is one is the expense to the brokerage, and then another one is the increase in sales. Because keep in mind, we'll go back to our whiteboard here. Essentially, what we're trying to capture is this difference between our GCI and what has been recorded. So obviously, if you do some quick math, we're looking at $2,700 is what we're trying to capture. Because right now, if we just imported our bank deposits, we're only going to show that 6,300 to it. So I'm going to record that sale, of course, but you wouldn't actually do this because you would already have this accounted for in your automatic bank transactions. So what we really need to account for is the sales. We're going to increase. So we're going to credit our revenue account, which would be sales, or if you named it commissions, whatever your revenue account would be. This would be your income type of account. It could be, you could have named it sales, you could have named it GCI or gross commission income, whatever it was that you named it. This is the account that you should be posting to. Next, you're going to record to that cost of goods sold account that we talked about. We'll just assign it commissions to brokerage. And we're going to automatically do that 2,700. What you'll notice is it should have 2,700, 2,700. They should balance out on each other because that's what accounting requires. It requires us to credit and debit our accounts. So if I zoom in a little bit, you can see here just exactly what I did. And you can see here that we have a balancing out of $9,000. And you can kind of see a little bit better here of what accounts that we're talking about that you need to assign the money and the transactions to. And then what you'll do is you'll just hit save. And that'll post your journal entry. And you're all done, essentially, for recording it. But just to give you an idea, I want to show you how it looks. You're going to go over to your reports section on your menu and just click on reports. That'll pull up your reports section that you can pull. And we're going to specifically pull our profit and loss statement. So we have our profit and loss statement here. And I'm going to need to change some of the dates on it in order to accurately reflect what I'm trying to get at. So let's just pull when I'm actually recording this video and when that sale would have been therefore posted. So we've changed our date here. And I'm going to zoom in here so you can see better the profit and loss statement. Okay, so check this out. This is the profit and loss statement. As you can see, our sales recorded is $9,000. Again, that's what I was trying to get at, is that we're accurately capturing the GCI, or the gross commission income. And then from our cost of goods sold, we paid $2,700 to our brokerage. And a result, this gross profit number actually reflects what, our broker paid to us. At the end of the year, if you're like a solo agent, it should be the amount that your broker will give you on their 1099 come tax time. And so you can see we now know what value our broker provides, or at least we can ask ourselves, is our broker providing $2,700 worth of value? So imagine I do, 10 of these transactions in a year. I have to ask myself, is my broker providing $27,000 worth of value? And that value could be in the form of leads. It could be in the form of a support system. Maybe they have an administrative staff that you're able to use for free. Maybe it's a certain kind of technology, or maybe it's not direct leads, but they help with marketing or something like that. But whatever it is, it gives you that insight to be able to ask, am I getting value from my brokerage? And the second reason that we want to do it is we want to kind of run a comparison to our how our expenses are as a percentage of our income. And you can do that by clicking on compare another period and then scrolling all the way down to the percentage of income so that it pulls the percentage of income, and then we'll run the report. And so now what we have here is our numbers expressed as a percentage of GCI. And what this allows us to do is we can get better insights into, say, for example, the percentage split that we're paying our real estate brokerage. Here you can see we paid 30%, which totally aligns with what we said our split was, 70-30. And this is great. This is insightful if you, let's say that you're working at a brokerage that doesn't have a straight line cap. Maybe they have a cap, and they don't have a straight split. It's not always 70-30. Maybe it changes based on your transaction volume or your GCI. So it's important to be able to see that, because then you can actually see the percentage that you're paying your brokerage as a result of, or as in relation to your GCI. So, and then in addition to that, if we had expenses down here, we had other expenses, we would be able to see our expenses in relation to our total net income. And really, at the end of the day, that's what we want, because that allows us to benchmark across, different agents, like other real estate agents. But also, if you're familiar with the book, or if you've ever read or ever taken a look at the Millionaire Real Estate Agent, there are some benchmarks laid out in that book about how much you should be spending in terms of different expense categories, as well as the cost of your brokerage. Now, obviously, you can take those with a grain of salt, depending, and I think the percentages are going to vary based on the stage of your business, but that really is a business model, or a financial model anyways, of the Millionaire Real Estate Agent. It really is built for real estate agents who are doing $1 million GCI. Well, it'd be $1 million GCI or $1 million profit, either one of those different models. So it's definitely worth recording your transactions and your commission checks in this way, so you can really get those kinds of insights.